So, hi, Marc Rovner.
Hello.
How are you?
Great. How are you?
I'm great, thank you. So, I've got 25 questions that I would love for you to answer and give us your expert advice on, if you don't mind.
I don't mind.
Okay, so do you offer the cheapest prices?
So that's a great question and one that we hear very often. We offer the most value. Very often, customers confuse cheapness with value. So our view is that once you're paying for the insurance, you might as well have coverage. So we first focus on providing our customers with the insurance that they need in the event of a loss, and then we look to mitigate the cost. So most often you'll find that we put together a custom tailored package that offers really what the customer needs and not what they don't. And as a result of that, we're able to save them money versus other agents. But no, we're not the cheapest.
What separates you from the competition?
So there are a variety of things that separate us from the competition. Firstly, we have the ability, and we've done this over 40,000 times, which is pretty rare. But so in addition to that, we're quite relentless in terms of finding the solution that is appropriate for our customers. And really, it's a matter of mating what they need with the products that are out there appropriately. And that's how you are able to get to the best value that we talked about and protecting them the way they need to be protected.
Okay. Do I have enough coverage to cover my house?
It's a question that we get all the time, and people oftentimes confuse replacement cost with market value. And very often people do not have enough coverage to replace their home. In terms of how much do they need, a person needs to think about, should they have a total loss, a fire or some sort of covered cause of loss that would demolish their home completely, do they have enough coverage to rebuild the home from scratch? And very often the answer is no.
What deductible should I take?
Another great question. So it depends on the individual or the business in terms of their risk tolerance. When I say risk tolerance, I'm not referring to insurance risk. I'm talking about their risk, their deductible risk. So for example, my personal view, and this is not something I necessarily promote to every customer, but my personal view is I do not want to pay to maintain a low deductible. So I will take as high a deductible as I could stomach in the event of a loss, and thereby reduce my premium. My threshold is higher than someone else's. So someone really needs to think about, are they going to be wiped out if they have to pay that deductible, or is it going to be a real burden to them? If it won't be, then they probably have too low of a deductible, and each person and decision maker needs to evaluate that for themselves.
Okay. What is the appropriate WC class code?
When talking about workers' comp class codes, again, this is a scenario where many people choose the wrong class code. So without getting into too much crazy detail, there's a national organization called NCCI, where many states subscribe to it, who you can call and they'll actually give it to you free of charge. Once you give them a description as to what your employees are doing, they'll give you the class codes you should be using for that state. You should be using the accurate class codes and not assume that because I have a policy in force and the law says that my employees are covered, you should not make that assumption that therefore you don't need to notify the carrier. You should be notifying the carrier using the correct class codes so you do not get surprised at year end with an audit and a crazy bill.
Okay. What drives the GL premium? For example, revenue, square footage, payroll?
It's a great question. It depends on what type of business. If you think about a traditional retail store, say a supermarket, those businesses were traditionally rated, their liability was traditionally rated by revenue. The concept being that the more business you did, it's indicative of more foot traffic. You have other businesses such as say, contractors where that may not be the best rating basis. For example, if you have a contractor who, I don't know, installs marble. So they may take a job, $250,000 job to install Italian marble, where the actual cost of the materials is a very, very large component of that $250,000. So the $250,000 in sales is not really reflective of their exposure. So for them, payroll may be a better exposure. Or you may have a jeweler who is selling $1 million diamonds. So if he did $5 million a year in sales, that does not necessarily mean that he had a lot of foot traffic. For him, square footage may be a better rating basis. So again, that's something that we do. We do an analysis with our customers. We review their business. We understand small business. We have an entrepreneurial mindset. And we make sure that the policy that they have appropriately matches their exposure.
Okay. Should I list my newly licensed child?
A great question that we get asked all the time. People have auto policies and they consistently do not notify their carrier of their newly licensed children, most likely because of the cost associated with it. And my answer is insurance is usually defined is the wrong word, but insurance is usually run by what's called reasonableness. So if it was reasonable, then it would be covered, and if it's unreasonable, it won't be covered. So the way I look at it is, if a child was driving and they got into a small accident, insurance carriers, nobody would care. Insurance carrier would probably cover it. If it's a big accident, you're giving them an opportunity. It would be unreasonable for you not to mention it to them, and you're giving them an opportunity to deny the claim for material misrepresentation of fact. So therefore, I absolutely would mention that the child is there. There are discounts that are available that we can discuss with our customers. But again, once you're paying for the insurance, you might as well be covered in the event that you have a loss. And very often, the greatest exposure is that child, that inexperienced driver who can threaten, or from a liability perspective, put increase exposure to somebody's nest egg. So I absolutely would recommend notifying the carrier of the child.
Should I pay my insurance in full for a discount?
Another fabulous question that we get asked all the time. Again, it depends on the discount associated with it. There are auto carriers, for example, that come to mind, like Progressive, that offer a very substantial discount if you paid in full. So again, if you've got the money and you can save 25% by paying it in full, that might be an excellent opportunity for you. I also am a big believer in not allowing, it's in vogue and certainly in the US mindset, to put everything on installments, everything on credit cards, and so on. I feel like if there are way too many installments, it's more opportunity for a premium to be missed and a policy to go into cancellation. So I do like when people pay it on installments because they make sure that they have the premium and the coverage in force for the entire policy term. And if it won't be on installments and there's no discounts associated with it, I definitely encourage people to put things on auto pay or auto draft, because it protects them. And again, that's the name of the game, to making sure they're protected as best as possible.
Okay. Is flood included in homeowners?
Absolutely not. Many people are very confused about this. Flood is excluded off all homeowner policies, or all standard homeowner policies. So you have no flood coverage on your homeowner's policy. And when we say flood, we're not talking about in layman's terms when you say that the toilet overflowed and flooded out the bathroom. That's not flood from an insurance perspective. We're talking about tidal waters or seepage or bodies of water that are in places that they shouldn't be. So it's absolutely excluded off of your homeowner's policy. It can be purchased through FEMA, although the government is shut down right now. We have other solutions. We have private market solutions for flood, but it is excluded. And once we're on the flood topic, it's our feeling that if you own a home, you should have flood insurance. And regardless of where you're located, if you're in a high hazard flood zone, you absolutely need it. And if you're in a low hazard flood zone, the premium is relatively small, and you should have it, because after Hurricane Harvey and other losses that we've had recently, many of the people affected by those floods were not in high hazard flood zones. So it's not on your homeowners, and you should have it.
If I'm not in a flood zone, do I need flood insurance?
Again, you don't need it. Your bank may not require it, but it's the prudent thing to do. We believe that's best practices today. We've seen terrible losses in a variety of different locations. We had just a few months ago terrible losses in Baltimore, Maryland, that were not in high hazard flood zones. They were in flood zone X. And it's not just been there. We've had those sort of things. Even Hurricane Harvey, I believe 70 or 80% of those affected by the flood were in low hazard flood zones. So we absolutely feel that you should have flood insurance even if you're in a low hazard flood zone, and we recommend our clients do that.
If I'm in a condo, doesn't my association cover insurance?
That's a question we get asked all the time, and you need to review what they call the black book of your condo association, which essentially defines the bylaws. But loosely speaking, from a macro perspective, most condos, your condo association takes fees out of your monthly dues, and they pay for an insurance policy on the structure, which is essentially the exterior of the building. Walls in, you are responsible for. So let's go there for a moment. Let's say that there's a fire, and the condo association would rebuild your apartment, your condo, and give you back what they call a vanilla box, which would not include any of the permanently installed items that you installed in your apartment, like those fancy tiles that you bought. That would not be included, and most likely the cabinets to your kitchen and all those other things that add up quite quickly. So yes, your condo does have their own insurance, but that protects the actual building structure, the finishes, improvements, and betterments that you put into your condo, as well as your contents, are not included, and obviously personal liability is not included as well, so therefore you would need your own condo policy.
Why do I need building coverage in a condo?
Again, that's related to, similar to what we were just discussing, the building coverage is really improvements and betterments. So things that were permanently installed into the structure of the condo, like high-end tiles or even low-end tiles, but flooring, tiles, cabinetry, things of that nature, lighting fixtures, those sort of things can be insured under the building limit, limit, and most often that carries a lower property rate than the contents. And the idea is that nobody's walking away with your tiles. It'd be very difficult to steal it. So they carry a lower property rate, and it would be prudent to insure those sort of things on building coverage.
Is it worth it to get a wind litigation?
So in CAT states, or states that are exposed to category storms like catastrophic storms like Florida, we get this question all the time from people who are buying properties for the first time. The answer is absolutely. The wind mitigation inspection really goes through how the specifics of the roof of the home, how it's attached to the structure, the spacing of the roof to wall connection, the exterior protections, and so on. And without it, the premium can be exponentially more than with it. So I say for $75, it's well worth the investment, especially if we're able to find credits as a result of it.
Okay. Should I take a defensive driving course?
Great question. In many states, such as New York, New Jersey, by doing so, even the online course that costs like $20, you can save 10% on your auto insurance for as long as 3 years. So if you have an expensive auto policy, which oftentimes is as a result of having some auto history, it may be an inexpensive and easy way for you to reduce your cost by up to 10%. So sure, if you want to save the money.
Why do we need an auto inspection?
It's a great question. We get this question all the time. People who have not changed insurance carriers in a long time are surprised by it. The concept is as follows. If you switch insurance companies, they oftentimes will, and you have a late model vehicle, they will want you to do what's called a cargo vehicle inspection, where they take a picture of your car. The concept is that they don't want you not to maintain auto insurance, to total your car, and then to give somebody like me a call and to bind up a policy and then submit a fraudulent claim to the insurance carrier. So when the car is not brand new, or not very old for that matter, what they'll do is that they'll ask you to take what's called a cargo vehicle inspection, and they take a few photos of the car and put down a description of the vehicle to make sure that there's not damage to the car and that you're not trying to do something nefarious.
What do we do differently?
What do we do differently? So what we do differently is, number one, we're just absolutely relentless. I don't think that there's another agent out there who has the stick-to-itiveness that we have. And when you take that sort of approach and marry it with the level of experience we have and the number of carriers we have, we're able to really custom tailor a robust policy for our clients' needs. So we have, throughout the marketplace, there are very many insurance agents that offer low-end coverage, and then you also have agents that offer very high-end coverage, but they're giving you boilerplate type of products. And what we strive to do is to really understand what our clients need and to craft the policy that they actually need. And in doing so, we are able to offer them robust coverage for what they need at an affordable price.
Awesome. Do you take credit card payments?
We do. It's relatively new to the insurance industry. When I say relatively, I'm probably over the last 10 years. But there were many carriers who even until recently took no credit cards. Not every carrier takes American Express. A lot of buyers like to offer American Express because of the point programs and so on. However, we do take credit cards. We're able to accept credit cards even on agency bill type policies. We can take credit cards, and we do.
Okay. What is an umbrella?
An umbrella is an excess liability policy, so it extends the underlying insurance coverage. If you've got a home, if you've got an auto, say the liability limit on your home is $300,000 and you buy a $1 million umbrella, so that means that you're extending the underlying liability limit from $300,000 to $1.3 million in total. The reason why they call it an umbrella is because, like an umbrella, it extends on top over multiple underlying liability exposures. So the $1 million can go excess over the home and the auto and your boat and your plane potentially all at the same time. And on the commercial side, it would work in a very similar fashion. You can have an umbrella policy that will go excess over your general liability, your automobile liability, your employer's liability, etc.
Will a replacement vehicle cost more or less?
That's a question we typically get asked when people are trying to figure out what the premium is going to be when they're evaluating a new vehicle. So actually it's kind of interesting. Usually when you're dealing with a newer vehicle, there are some newer safety features. So that works in your favor. On the other hand, the vehicle costs a bit more because it hasn't depreciated yet. So if it's exactly the same model, it'll probably be similarly priced, but we would need to evaluate it. But that's assuming rates haven't changed. So there's no exact science to it, but in general, there's an inverse relationship between the property and liability. The newer the vehicle, the property costs a bit more and the liability a bit less.
Why do I need uninsured motorist coverage?
So if somebody's involved in an accident, in an auto accident, if the other party was at fault in an appropriate scenario, the other party's insurance would take care of your medical bills. However, unfortunately, there are people who are driving around with either no insurance or they don't have enough insurance to cover you for your medical needs at the time of that accident. So it's a coverage that you're able to purchase on your own policy, which says in the event the accident is not your fault and you get injured, you can essentially access that coverage from your own policy. So it's a great coverage to have. Everyone should have it. I personally, years ago, was involved in an accident where somebody ran a red and they had no insurance. So I know firsthand what that means.
Okay. And what is uninsured motorist and underinsured motorist coverage?
Yeah, so that's exactly what we were just discussing. One is where they have no insurance, and one is where they simply don't have enough. They have the state minimum limits, and somebody has a substantial cost associated with the medical needs that they have. So they just don't have enough. That's the difference.
Okay. Why is my policy canceling?
It's a question we get all the time. So usually the notice of cancellation that the client receives should detail why it's being canceled. Most often the reason for that is because of non-payment of premium. They missed the premium payment and so on. Oftentimes, however, it's as a result of carrier recommendation or insurance inspection where they didn't meet certain guidelines, and sometimes it could be rectified. So it is important to look as to why the policy is being canceled. Did you pay the bill? Maybe you did and it was across in the mail and it's going to be rescinded shortly. Or, did they come out to your home? We just had this the other week and the guy had 2 windows that were cracked. Well, it just so happens that his son broke those windows in playing ball with his friends, and they were in the middle of getting them replaced. As soon as we evidenced that they were secured, in this case replaced, the notice of cancellation was rescinded. So in terms of defining why someone's policy is being canceled, they need to actually look at the notice of cancellation and it'll spell it out for them.
Okay. And what is an additional insurance?
An additional insured on a certificate is an entity that wants to be named as an additional insured. They're not a named insured, meaning they're not an owner of the policy, but they're being named for various purposes. So for example, if you're a commercial entity, you're a business that is going to be selling products to Walmart. Walmart will require that you provide them with a certificate of insurance that from an appropriate insurance carrier with appropriate limits, which is essentially saying that not only will the insurance protect you in the event of a loss, but will add them as an additional insured so that in the event somebody sues them as a result of something that your product, say, did that harmed them, they'll be protected as well. That's the use of additional insured, and typically it comes up with certificates.
Okay. And what is a waiver of subrogation?
A waiver of subrogation, well, let's first define what subrogation is. Subrogation is where one insurance company essentially sues another company. So for example, if you're involved in a car accident and the other person was at fault, if you decided and your car got severely damaged, if you called up your insurance company and said, please take care of the claim, and they cut you a check, they will most likely subrogate and go against the responsible party or their insurance company in order to collect. When somebody waives the right to subrogate, they waive the right to go against the third party. Now, where does that come into play? It comes into play often on the commercial side. So, say for example, you are some sort of artisan contractor. You bid on a job in a building. You want to fix, redo their electrical work. And what they'll do is they'll often say, okay, you're coming in to do the electrical work. We have faulty wiring over here. We don't want to get sued by you saying that you got burned as a result of the faulty wiring. So you're awarded the job, but we want you to provide a certificate of insurance with a waiver of subrogation, which is essentially saying, look, you understand that what you're getting involved in, and you understand that there's faulty wiring over here, that's why we're hiring you, and you waive the right to subrogate against the building for any contributing negligence, because that's kind of why we're bringing you in the first place. So in those sort of scenarios, they will often request a waiver of subrogation. They don't want to hear any stories. They just want the waiver of subrogation.
And how do I understand what is covered by my policy?
It's a great question. So Stu Oberman, who was a legend in this business, he used to look at a policy from backwards, not because he was dyslexic. He would go to the back of the policy because he would first look at the exclusions. The reason why he did that was most of the policies he sold were broad form or better policies. And what that really means is that, at least from a property perspective, that everything is covered unless it's specifically excluded. So he would first look at the exclusions to see what was not covered to get an idea of what was covered. And that's kind of the way I learned this business, and I still recommend that. If somebody really wants to get an understanding as to what they've got, they could look at the declarations pages first. They don't need to really start at the back. But then I would go to the back, look at the exclusions, rather than going through all the definitions and so on, because they'll get lost in the meat and guts of the policy.
Okay. How is my jewelry covered?
It's a great question. I'm assuming you're talking about from a personal lines or a homeowner's perspective. You virtually don't have any jewelry coverage, and if you do, it's on a very small sublimit. So contents coverage covers everything within the home, which would include furniture and clothing, but things of specific high value like jewelry, fine arts, golf clubs, stamp collections, silverware, those things would need to be scheduled. So if you've got jewelry, you really want to insure it separately on the schedule on what they call a personal articles floater, and that's the appropriate way to insure it. Any other way is not the right way.
Okay. Should I own the vehicle personally or commercially?
I get that question sometimes, usually from entrepreneurs. I usually don't let the tail wag the dog, so it depends how the vehicle is being used. If you have a vehicle that's being used in a business environment, I would recommend titling it and insuring it from a business perspective. Conversely, if it's the opposite, do it in a personal lines realm. Sometimes the lines get blurred. Somebody leases a vehicle personally, then they end up using it in a commercial environment. Again, in that sort of scenario, I would have the insurance policy tailored, to have the commercial policy named the individual or vice versa. But you don't want to let the insurance premiums dictate how you're going to operate the vehicle. It should be the reverse.
Okay. What is a co-insurance penalty and a co-insurance clause?
Those two terms are synonymous, and basically the clause, or loosely speaking, they're synonymous, but basically it's a requirement on very many policies that an insured insures their property up to a percentage, usually 80% of the value of the property at the time of a loss. And if you don't, there's a penalty associated with it. They take what you had, divided by what you should have, and they multiply it by a loss. So for example, if you have $100,000 property, you need to insure it up to 80% at the time of a loss, which would be $80,000. So if somebody has a $50,000 loss, they may think, oh, I'm fine. But that's not necessarily the case. What they're going to go out and evaluate how much was the total value of the property. And if you were insured up to 80% or more, you're okay. If you weren't, they'll take what you had, divide it by what you should have had, and then they multiply it by the loss, and you could be in store for a haircut. We do sell some policies with co-insurance clauses when it's required, but we really don't like doing it. We like to sell policies that have agreed amount, replacement cost, with no co-insurance penalty.
Okay. What does guaranteed replacement cost mean?
It's kind of a term that's not... guaranteed replacement cost means that the insurance carrier will pay to replace what you've got regardless of the limit set on the policy. So if somebody's got $1 million on the policy for their home, and at the time of the loss it costs $3 million to rebuild, if they have that guaranteed replacement cost clause on their policy, the insurance company will pay the $3 million even if they only had $1 million on their policy. This is usually reserved for very high-end carriers like Chubb. Used to be offered by Fireman's Fund and ACE, which are all now one company. But there are still a select few high-end personal lines markets that offer that.
Okay. Thank you, Mark.
Thank you.